After regaining momentum through most of last year, U.S. economic growth is slowing again. Welcome back to RealPage Economy Express. Let's start with growth. Fourth quarter GDP came in at just 1.4% annualized, a sharp deceleration from Q3's 4.4 pace. Consumer spending and investment still contributed, but government spending and exports both pulled back. For the full year, 2025 GDP grew 2.2%, down from 2.8% in 2024. Solid, but clearly losing momentum. Part of the growth slowdown ties directly to trade. In December, the U.S. goods and services deficit surged to $70.3 billion, up nearly 33% from November, as imports rose to almost $358 billion, while exports slipped to nearly $288 billion. Strong demand for industrial and capital goods drove imports higher. For all of 2025, the trade deficit narrowed slightly to $901.5 billion, with exports up 6.2% and imports up nearly 5% from 2024, showing that trade remains a key drag on growth. Turning to the labor market, weekly unemployment claims came in at 212,000 for the week ending February 21st, up 4,000 from the prior week, while the 4-week moving average edged up to a little over 220,000. Meanwhile, the Conference Board's leading economic index declined 20 basis points in December, marking its fifth straight monthly drop. Overall, the labor market remains in a low-hire, low-fire state, steady but not overheating. On inflation, the PCE price index for December rose 40 basis points on the month and 2.9% year over year. Core PCE, stripping out food and energy, also rose 40 basis points monthly and 3% annually. Personal income rose 30 basis points, while spending rose 40 basis points, and the savings rate dipped to 3.6%. Inflation is easing gradually, with consumers maintaining moderate spending. Now to housing. Starts rose 6.2% in December to a 1,404,000 annual rate, and permits came in at 1,448,000. But for the full year, starts were essentially flat. New home sales came in at 745,000 in December, down 1.7% from November, but up nearly 4% from a year ago. Now, the median price fell 2% to 440,000, with inventory at 7.6 months. Pending home sales slipped 80 basis points in January and were down 40 basis points year over year, with the pending home sales index at a record low 70.9. Now, housing remains constrained, with supply and demand totally out of balance. Finally, consumer sentiment shows caution. The Consumer Sentiment Index edged up to 56.6 in February, but remains nearly 13% below a year ago, while the Consumer Confidence Index rose slightly to 91.2. The expectations components at 72 has been below the recession warning level of 80 for 13 straight months. Consumers are also watching prices and the economy closely, but not panicking. Stepping back, growth is slowing, trade remains a wild card, the labor market is steady, inflation is somewhat easing, housing is pretty tight, and consumers are cautious but resilient. Thanks for watching RealPage Economy Express.